Hi everyone, I'm James Barrie.
And I'm Stefan Linden.
And we're back with more exclusive research from Canaccord Genuity analysts. But before we begin, some important information. This week we're looking at Docebo. Docebo specializes in providing tools to effectively train employees, partners, and customers online. But that only partially describes what they do.
What's interesting about Docebo is that it uses AI learning to help its clients compose relevant educational content. Its analytics platform tracks the effectiveness of content so it can consistently be improved. Moreover, it currently has over 2,000 customers, which includes big names like Amazon, Samsung, and even Netflix.
And despite market pressures in the software sector, Docebo continues to see a high level of interest from prospective customers and partners. It's still a relatively new sector with low penetration, and there is still room for significant growth. In fact, Canaccord Genuity analysts see Docebo continuing to add to its customer base of medium and large enterprises.
Now, Docebo does face competition from big players such as SAP, Adobe, and Workday. But that doesn't matter that much because the market for learning management systems is expected to double over the next 5 years, from 16 to 38 billion. Now, this would be about a 20% annual growth rate, which leaves a lot of room. And this is really driven by the work from home movement, as well as a lot of money coming from higher learning institutes.
And although the pandemic has brought some of Docebo's growth forward, its management is optimistic that a shift towards larger enterprises can keep the momentum going. One key important measure for any software as a service company is annual recurring revenue, or ARR. Of Docebo's 60% ARR growth year over year, approximately 50% consisted of large enterprises.
So Docebo recently released their fourth quarter earnings on March 9th, which beat Wall Street estimates. Now, it made note of their continued success in the enterprise segment, with companies like Black & Decker, Applebee's, and adding the NCAA. Docebo's management also upgraded their profitability forecast, which is huge. Now, they brought their cash flow expectations to be cash flow positive by the end of 2022 instead of 2023, moving everything up by a year.
And that's impressive. Finally, for valuation, Canaccord Genuity analyst Robert Young has adjusted his target to a 10 times 2023 sales multiple. This is adjusted to be in line with the current trends in the tech industry. And it gives Docebo a target price of $65 US per share.
Now, thanks everyone for watching. Now, please remember to like, subscribe, and share this content.